Good morning. It's June 20th. Ron and I are here today. We're going to cover a few things. I have a license agreement with Ron to utilize his materials. The agreement requires me to share this notice. I do have his written permission to utilize his products in this manner. And here's our standard disclaimer that we go over at the start of every session. That's because it's important for you to understand that this is educational and information purposes only. It's not advice. Anything you talk about today is covered by the disclaimer, and you alone are responsible for how you evaluate and utilize the information that you learn today. Our agenda is to go over the market forecast. Then we'll talk briefly about the improvements that have taken place in Pi Visions in the last month, and then spend a little bit of time looking at the call search engine modules that is in place. And with that, Ron, take it away.
Okay, here we are. The forecast. Remember, at the beginning of the year, here's what I had selected for the forecast. Interest rates down. Interest rates have not gone down. We'll test that criteria coming up, but that's what we had. So if interest rates go down, that gives the market an upside. Unemployment rate up, that's negative to the market. Price of oil flat, so there's really no impact if the oil is flat. GDP growth rate flat. U.S. dollar weaker. It's the second year of the presidential term. Consumer sentiment flat, and our Sedgwick chart, we're going from A to B. So this is the forecast we put in place, and the chart gives us an idea here now about a 13 to 14% upside from beginning of the year. And if we compare that now to the actual, what's happening? Well, other than that April drop by the market on its own, the market is tracking the forecast fairly well. There are always going to be, ups and downs, but the trend line, the forecast and the market itself are pretty close. And so the question is, are these the factors that are going to be for the rest of the year? Well, let's test it a little bit, okay? What if we change here now, going to basically the interest rates? We said we're going to go up. Well, they're not. I mean, what I've heard on the new Fed chairman was we won't have a change probably until next year. I mean, that's kind of my reading of the cards or what he said and what all the commentary that went around that. So that means it's going to be flat, okay? Uh, and flat is good, okay? That's okay, that's good. Unemployment, we said up. Well, the job market has been pretty good. So what if we say flat on unemployment and then flat on the price of oil? Large fluctuation here the last 2 months because of the Iran situation, but over time, I think, by the end of the year, we're going to be back down to oil prices that we've experienced earlier this year. In fact, I think the highest I paid was $4.20 a gallon a couple of weeks ago. Yesterday, I filled up because I just thought, okay, the price of gas is going to go down, so I'm going to wait right to the last minute. And I bought gas for $3.59 a gallon. So that's 80 cents below what it was a couple of weeks ago. So the impact is real. If we get this, the Strait of Hormuz taken care of in this whole Iran situation, oil will be back to a reasonable price. Gas will be back down. The economy will move along. People spent a little more gas money here in the last 2 months, but that'll not continue going forward. So I think the impact here, that what it shows is the market's right on this forecast. Unless something really changes, I think this is what we can expect that should happen. If we, If interest rates are flat, by the end of the year, they are where they are now, unemployment flat, and price of oil, you see, if price of oil went up, that would drive the forecast down, but I don't think, from what I see, it's going to be flat. So this is kind of, I'll call it a way to re-look at what might be happening for the rest of the year, and to me, in my mind, is positive. So I don't, I can't see anything really knocking this down other than I'll call it a international situation that, hasn't come up yet. If Russia and Ukraine get into a nuclear battle, that could be bad, or if something really bad happens in Iran. So there are these threats that we're going to bomb the hell out of them, but I don't know really if that's the right thing to do and whether the administration would do it or not. But a lot of questions in that arena. So those are forecasts you really can't forecast. Those are events that happen once. It's not like interest rates or unemployment that you're measuring and following. So it's one of those things that you can't really forecast. And it does happen. It's very negative. You're just aware of that. So if we look at Outlook, Outlook says, yeah, we're moving higher. So the trend is there. And so I think, the opportunity for the next 6 months is good. Again, be cautious, but I think upside is the view that this is showing us. Any questions, comments, other theories?
So, in your opinion, is it better at this point in time to stick with at the money or in the money as far as selling calls go?
I would say at the money. Yeah, at the money. Little bit in the money, but at the money, there's some upside. Okay, so
Right. I guess that was
yeah,
actually
so
what I was
yeah.
asking. Yeah.
And some, some stocks are so volatile that they have a lot of premium, in the money away. So take advantage of that. I mean, you have to be careful. Like SpaceX now, I don't know if anybody's in SpaceX, but it has moved up a lot and it can go down a lot very quickly. So you want to be very careful if you're in SpaceX. And it's so new. I mean, they have a lot of revenue. They're a big company, billions of dollars. It's amazing, really. But still, everybody says the price is too high. But then again, look at Amazon, struggled for years to get a high price, and all at once Amazon, really moved up significantly. Well, SpaceX moved up on the IPO, but they've got
Well, I think it was,
a lot of debt. They're not profitable. Okay, they're losing billions of dollars. That's a lot of investment in all those satellites. But think of the revenue stream. I mean, I don't know, they're generating what, maybe 10 million a month? I mean, that's a billion a year. Wow. I mean, automatically it's just a repeat. This doesn't have to resell this. You just collect monthly.
I think it
That's
was
a good
Chuck
business
Yeager
to
that
be.
said, you never fly the A model of any airplane. So when it comes to IPOs, that's kind of my philosophy. You never buy the A model of any
Oh,
stock.
okay. Unless you just have some Las Vegas money there, you want to
That's
put it
right.
on red or black, up or down. So, right.
All right. Sounds good then. Let's talk about Pi Visions. It's been a pretty busy month. I know as y'all have been watching things take place, you see almost a change every day, it seems like. But the current version right now is version 1.3.11, which I actually pushed out this morning, the version 11. A couple of things that have major moves that have taken place is the call income generator module has been fielded. This is kind of in reverse order of what took place this month. We've implemented a new thing called Prime Calls and Puts module that's been fielded now for use. We implemented the list manager. Several people had been asking about having a list manager module, and so we got that added. We reformatted all the page layouts to where it works on an iPad. And then I think cosmetic wise, we've implemented a business branding, which is colors and styles, and we've got consistent navigation built into the program now. And then at least internally, the big thing was to implement the version control measures to where I could keep track of the various things being done and changed as we work our way through the work on it. So we're always open to suggestions for improvements and things that you'd like to see. The next big move that I'll be working on will be for the put income generator. That's the similar side to the call income generator. Right now, today, I've been working on the weekend cache. We're working to implement a weekend cache so that getting stock option prices during the weekend go a lot quicker, as well as after hours. And that's, I got a little bug. I got to figure out what's the problem, because when I test things locally, it works very fast. But when I load it up to the server and test it on the server, I get a pause like 6 tickers into the list. So we're working to make things run faster, quicker. With that, we'll talk about the call search engine. This is what we call the dashboard. We've implemented the information there on the markets, as well as the metals and bonds that you used to see when Visions opened. And you can see that we've patterned this somewhat after the way Visions had been set up with our option search engines top left, and then charts and fundamental engines there on the lower left. And then we've got tools, the list manager, the market index simulator, stock outlook by Monty, Pi, and trade planner over there. You've got your username at the top. The top area, I call that the navigation bar, because as you work your way through the program, that's where the navigation tools are to go back to the dashboard or go back to things. And I do have expiration information that we're monitoring now. For the most part, people who are on PayPal will never have an expiration date there until you unsubscribe. And then for the people who are manual pay, I've got to go in and populate the file, but that'll be a reminder as to what the expirations are for you as you're using it.
Back up 1 second. Tommy, I have a comment. So this here basically is kind of like the main page on Visions, and the topic about the market, that's the market index simulator. So everybody can look, start that up and change we have the default set that we picked for the year. That's the default setting. You can go in and change interest rates down or flat or unemployment, and just get your own view of what the impact is on some of those variables, because it's very interesting to get an understanding of how they affect the market, or how they affect the forecast going forward. So if you have a feeling that something is going to change, you can test it and put it in the market index simulator to get some idea of what the impact might be on the market. So it's right there available for everybody to use.
Thanks, Ron. If you select the call search engine, then this brings you into the it, what I call a landing page. And you've got your navigation at the very top of the dashboard. To go back to the dashboard there, you've got the same concept that Ron had, which is you have to have an active ticker list. So you have the ability to input tickers here and hit the apply, and then that'll make it active. And then you can, at that time, then you can select a tool to utilize. I've got down here to do a live demo. So let's take a look at that. So again, here's the dashboard. To get to the call options, you can select there. What I've got a test list, and then I've got the Dow 30 in here. And so currently this is set up with the Dow 30. And the call option chain, we'll see how it works. It normally takes about a minute to about 2 minutes to get all 30 tickers, but you generate that. And so it's going to take a couple of minutes here while it loads these option chains. You can kind of scroll, even though you've got the overlay, you can scroll through and see the progress ticker by ticker. And you can see it's already filled in pretty quick, and it's already finished now. So there's the list. One of the things that we've added just last night is an expiry mode. We had a situation where somebody said, I want to see the options greater than the next 90 days. Generally speaking, that's all we go out is 90 days. So I've added an ability, just like with the strikes, where you can look at all the strikes. You can also look at all the expirations now. So when you change that, it's going to go out and get them. I shouldn't have used Apple, because Apple's got 3 option expirations a week. But
Monday, Wednesday, Friday.
Monday, Wednesday, Fridays. But nevertheless, yes, it's going to go out, and you see it's still fairly quick. And there, I did set it up to where it does not go more than 1 year. So generally speaking, we don't use leaps, although I do know that some people like to utilize the leaps for synthetic covered calls. So now you've got the ability to go way out in time and select expirations that are out there. You can change between using the calculations here, and the best fit, the break even, downside, all that is based on midpoint. You can change that to the bid ask. And when, just like in Trade Planner, when you change to the bid ask, it suddenly highlights that column for you, so that now you know all these results are based on the bid price. And you see that's based back to the midpoint. Strike ranges can change if you need to see more than what's there. So back to the search engine, or you can actually go back to the dashboard from here. You've got a choice. If you choose the call option filter, I'm not going to run this because there's a bug, and it'll take about 6 minutes to do all 30 tickers, which is odd to me because, as you saw, we got the Dow 30 a lot quicker. But I've got a bug in the filter program. But this is a way to where you could put in different items that you want to see. in terms of changing, let's say you only wanted to see the returns that had, if sold, 1%, a minimum or a max. Same thing on the if expired, you could set a range on those. P of A, downside protection, again, in the money only, ability to filter based on the best fit. Ideally, then you would run that filter and it would generate that. Let's go back, clear this. We can just do a couple. Apply that again. Getting the chains is fairly quick. So we've got these three. I didn't mean to go back to the dashboard, but that's what I did. And so then on the option filter, we can run that. Three of them will go fairly quick. So then this is sorted in the sell calls reward column. And I told Ron I was going to make a chart explaining that, and I didn't do that, the slide. But Ron, do you want to talk briefly about what the sell calls reward is?
Right. This is, some time back, wanted to look at what is the result, okay, of your if sold, right, when stock is called, or if expired. And I said, okay, we have the numbers. We know what the probability of assignment is, which suggests that, okay, if that is like 60%, the probability of assignment, then 40% is the probability you will not get assigned. So if we take 60% and say, okay, what is the return that we get, okay, if we get called, that's a percentage, but we also have a return if we expire, right? That's the 40%. So I said, why don't we just make that calculation? So we take the probability, okay, of getting assigned times the return, the percent return, if assigned, plus 1 minus the probability of assignment, right? 1 minus 60 is 40. You multiply that to 0.4 times if expired return. And that number then is a number that you can calculate for every option line. And now you can sort it, say the higher the number, okay, the better the chance is that you're going to be successful at that rate. So that column then, if you sort it, shows which options, okay, the stock and option are give you the best return. And so if you look at this thing, it's sorted by that column. If you go down, we should pick up some of the other ones at some point here. See, it's all AMAT. Here we go. There's IBM in the middle. So IBM, and it's based, I would say the reason there is IBM premiums are less than AMAT, the premium value, and that's why the percent is going to be less. So it's a way to sort your list by probability of return. So saying which is better, an AMT call or a IBM covered call. So it's kind of you're answering that question just by looking at that column.
I was saying if we narrow it down to just looking at 3 weeks out, there's still a lot of premium there in AMAT, but
IBM shows up now.
But IBM shows up
out in time.
Out in time, 2 weeks there.
So more
and Southern Company being a utility, I would expect it to be way down. It does not have
high premiums.
Good premiums. But like you say, it's a way to look at a list and say, kind of like the put factor tells us, are you getting compensated for the risk you're taking? This is a similar concept. Are you being rewarded for what you're doing? And which particular ticker, as well as which particular expiration provides that to you. Prime calls does a similar thing in that I would suggest that you, until you become familiar with the tool, always choose the select any. And then you can look at the current week, and that tells you there's the expirations, current week plus a week. So if you're doing 2 weeks, current month or a month out. And as you select these, then it changes these days. There is a ability to customize this. You can choose your own time frame to be looking at. So if you wanted to look at 3 months out, all you'd have to do is change the max days.
Well, then change the min days too, because that pushes
min
you
day.
out
Right.
for that 7-day interval to look at, options only in that time frame.
So it didn't find any. So you can go back to the settings. Next strike up. I may still have a bit of a bug in here. Set any
Current.
next strike up. It's not finding any. I've got a help button in here. I'm starting to implement having helps. Here's what Ron was talking about, the cell calls reward. There's the write-up on it to help you understand that. So I got to do some more looking at this because it should have brought us back some.
What's on the filter again? You have
I've got next strike up, current week plus 1. Oh, okay. I think I know what's wrong. In fact, I'm pretty sure I know what's wrong. Let's go back. It's here.
it's only 6 days.
Got to be 13. It's got to be 13. I'm a day off.
Yeah, a day off. Yeah,
I'm a day
okay.
off on that filter.
Okay, so there
So-
are the
So there it is again. And of course, you can change the premium mode to utilize the bid. And if you want to look at things on an annualized basis, you've got the ability to do that. Of course, that pushes the numbers up way high, but nevertheless, you can look at things on an annualized basis.
So this is you get one line for each one of your tickers. So we're picking the, based on your filter criteria, showing you which option, okay, for that particular stock gets you the best return.
Now, this isn't necessarily a good example because it didn't filter out any of these particular candidates. But when it does filter it out, then you can export those tickers to the list manager by making a name. And then that's available over in Trade Planner, as well as anywhere else in the program to where you could use it however you want to. And there's the ability to export it to a PDF to where if you wanted to keep a record of what you found. So, and then the last one is the income generator. And this definitely is not ready for prime time. Okay. But what this is, I'm still working on this tool and building it. But this is like a position manager. It helps answer the question about what call to sell next. So you can see this particular GDX position expired. What I was looking at was during the market day. When I said expired, it was actually below. Let me collect my thoughts for a second. The call was in the money. The question is do I want it to get assigned? I said, no, I don't want to get it assigned. I want to roll it out and up for a credit. So when I was planning the trade, it said, okay, you can buy back. This was a plan, buy back the call, and then this would be the next call to sell. I'd have to go out to the monthly, but I could go up for $1. I could make it for a 30-cent credit. I'd still be losing money if it was assigned, but this will be neat whenever we get it finalized to actually kind of walk you through one of those on a weekend. It keeps track of the sell on loss point, and it'll let you know if the current price is below the sell on loss. There's a cascade of about 7 different things that it looks at in determining what's the next trade to do. Let's see. So let's say here's an open position on Tesla. I was looking at a plan. One of the things that you could do with this, it's a little bit like Trade Planner. It wasn't originally built to do this, but when I was working with Ron testing it on Friday, we were looking at some things. Ron says, "Hey, put in a ticker." It was really built to help you manage positions, not find the first one. But you can add a position. Now I've got Amazon loaded, and what I could say is that 6/18/26. We'll put it down as executed. Let's say we bought 100 shares of Amazon, and it closed at 244.39. You can input your commissions and fees, and of course there's none there. This is a purchase, so I like to put the colon there. So I add the row. So now I've got a ledger, and you can see my plan next trade button has been activated. Click on that, and now it's going to go out and start applying these different rules. It calculates what the sell on loss is based upon the VTEM settings. And so now it says, okay, here's your plan on Monday. Well, actually today, it says today. Like I said, we got a few quirks in it, but it would say sell the next Friday's expiration at 2:45. So it's going one strike out of the money at this point on the plan. And there's our returns and everything, and then that's what you would make. So then there's a plan. You would want to save that plan. And then on Monday, when you come back, now you've got an active position, execute your plan, and now you need to edit the rows to put what you actually executed it for. And you'd put in a price and put in your commission, and then you'd have a call open, and then you would update that row. And now that's become executed. You still have the plan here. That's a little bit of an intro to it. You can import CSV files as well as export them. And if you want to try to jump in midway, we've got file templates here to where you can download so that you could put in your information and then you could import that and be set up with a trade that you currently in without having to go through and enter it through the edit tool here. And you can set a fee schedule. We'll eventually introduce this into Trade Planner to where you put in what your current rate is with your brokerage firm, and then you would save that. But the default is no fees involved. That's just a
Partial introduction, okay? I think
and your head's probably spinning.
that, but it's trying to answer the question that a lot of people have had. Well, what do I do? I did the trade, but I didn't get called. What do I do next? And this we're trying to answer that question and have the computer do all the work to kind of show you here's a suggested next trade. Okay. And if that way you got a starting point versus what should I do? Okay. Do I go out of the money, in the money? I mean, so it gives you a way to plan for those trades that didn't get called because it's going to happen. Okay. And that way you have a mechanism to make that happen and to track it. Okay. Because what if it happens 2-3 weeks in a row? Well, you'll have the list there of where you are in getting out of that trade, where the break even is and what the premium that you get is basically reduces your loss, reduces your cost of the trade. Eventually, if you do it long enough, like the one stock in my book for 8 years, I sold calls every month. We had monthlies or quarterly way back. I mean, yeah, it was unreal what has changed, but a lot of stocks every 3 months they had an option, okay? And so I was just selling calls continuously for 8 years. By the end of the time, okay, I think my basis was zero. So anything I got for it was profit. But that's a long time. But if you had a tool that kind of helped you, if you do it on a weekly or monthly basis, I think it's a way to, I'll call it, feel more comfortable that you're doing the right thing.
And of course, everybody's going to say, where are those rules and all that stuff? Go back to our user meeting back middle of last year. If you'll remember, we talked about how we were managing trades, the covered call trades and the trade planner and the recovery. And so, yeah, we've got a written set of rules, and we'll obviously share that to where you see what the computer is doing, so that if you decide you want to go rogue on it, or if you want to think that it's not making the right decision, then you can at least see and understand what those are. But that's kind of how we work our way through these different rungs in the ladder, or as you may have seen the word there, cascade. The way the trade cascades over time. So that's a little bit about calls, and I know that that's quite a bit of information, but we're continuing to work on it. And it's getting to be where it's complex enough we should have a meeting. So
I agree.
So we're thinking through that, but it's definitely getting to the point to where there'd be enough for us to sit and talk and study and work our way through learning the tool, because I've tried to make it intuitive, but there's, as I've tested it with Ron, it's not quite as we add more features, it's losing that intuitiveness. And Bob was gracious to share his spread calculating monitoring position, which ultimately I want to get that built into it to where it takes care of spreads much the way he trades.
Mhm.
So, any questions? If not,
Not yet.
not yet. Or there's so many questions that you don't know which one to ask.
I don't know enough to ask a question.
Yeah, right. But we're certainly carrying it further than what Ron did with Visions and Visual Basic.
Right,
This being a tool online through a web browser, we can make the computer select those certain things that you now don't have to, and you can focus on the results rather than the mechanics. So that's where we're at.
so go to Pi Vision there, test out that forecast. Put your feelings
Yes.
in, see what happens.
Go to what? Oh, yes. Okay. Back to the dashboard. So market simulator. So this is what Ron was saying. You can see where I've got it set on where we were. You can reset back to the
You have
default.
to share the screen there, I think, Tommy. We got pictures
All
on.
right. Yeah, you got pictures. Share screen. Thanks. Of course, you still got pictures.
There we go.
Yeah. So here it is, reset to the default, but we had said flat, 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 and flat, generate the forecast. And there it is. And that's not only for the S&P, but there's what it does for the Dow as well as NASDAQ. Okay. And then this is a normalization to see who outperforms. It shows there's still tremendous upside in the NASDAQ. And then you can change it however you want to. Say that sentiment goes down. Hit the generate forecast. And you can see what it's doing. It's changing the blue lines, changing what the forecast is. So, and then once you make settings, then you have the ability to save those settings and by naming it, and then you can load any of your old ones back in March. Now that was when we were back when we were looking at this was done in March, and we were looking, that would have been right in here. So we were trying to match what the market was doing with the conflict. And we were saying, yeah, it's got to get resolved. Otherwise, this is what's going to happen. Sure enough, it's been resolved. Now we're back on track with everything else. Okay. All right.
Good job, Tommy. Thank you.
Thanks, Ron.
Very good.
Amazing.
All right. Have a great month. If you see anything on Pi Visions happening, things like that, you can, again, the version numbers in the very top left-hand corner, and you'll see how that improves over time. All right.
All right. Good job.
All right.
Hope you all have a great month, and we'll see you next time.
Thank you very much.
Right. Happy 4th of July.
Yep.
Yeah, that's coming up. Okay. Bye.
All right.
Bye.
Take care.
Bye-bye.